Hello, and thank you for visiting my channel. I'm so excited to be recording my second YouTube video. Today, I'm going to talk about the stock market. But before I do that, I just want to make sure that you understand that this content is just for educational purposes. As such, what I shall say should not be used as uh, recommendation for particular investments. It's just for educational purposes. And I'm going to start by just defining what the stock market is. But to simplify this, I would start by just defining a market. A market is essentially a platform where two or more parties interact for the purpose of transacting or doing business. In this case, the business of trading shares. So, for example, let's say what happens is that, let's say a company wants to raise funding, right? So what they do is they invite the public. So how this happens is that they choose the stock market to list on. For example, there are quite a number of stock markets in the world. In Canada, there's the Toronto Stock Exchange. The most popular ones are in the United States in terms of the volume of the trades that happen on a daily basis. So you have New York Stock Exchange. In New York, we have the Chicago Mercantile Exchange, mostly for commodities. Let's say someone wants to buy grain in other parts of the world, for example, let's say in India, and they are based in North America. They can do that through the Chicago Mercantile Exchange. And then you have the other popular one called the Nasdaq, and the Nasdaq is mostly for trading uh, technology stocks. So that's where you find those technology stocks like Meta, formerly known as Facebook. Uh, so those are just examples, and there are many stock exchanges in the world, in China, in Europe, in Australia. So it is very, very important to understand that if you then want to invest or buy shares for the stock or for any business, as I like to call them, you have to understand where they are listed in, or in other words, where those you can buy or sell those shares. Having that information now, it is very important to have, the capital that you want to start investing. And usually people invest via the brokerage, because I said they are buyers and sellers. So what happens is there has to be an intermediary, and this intermediary can be in form of a brokerage firm, and these brokerage firms can be banks or institutions that offer those services. And there are quite a number of them in Canada, in the US, or all over the world. So you just have to choose the one that suits your needs, including understanding that for each transaction that you do, there can be some cost that is attached to it. So if you want to maximize your returns, then you have to uh, choose the one that is cheap and that offers, that meets your needs. So once you choose that, you then decide to uh, then if you are an investor or a trader, right? And there are a lot of players actually who go to the market for the purpose of doing business. Like I said, so they are institutional investors, and these include banks. Uh, uh, in the United States, there are many of them: Goldman and Sachs, um, JP Morgan. There are lots of them, just as an example, right? And usually the trading, it happens very fast, because they use computers, right? Algorithms. So it's very fast. And then if you want to invest as an individual, what it means is that you are a retail investor. So you just buy shares. So if you have the brokerage account and you want to buy shares for a particular stock, then you can do that. Now, it is very important to understand that you can buy shares of individual companies, index funds, or exchange traded funds, ETFs, or mutual funds. So each uh, person can choose to just buy any of those or even more. There are a lot of those products, even guaranteed investment certificates. There are lots of them. So you just have to understand your goals. If you want to grow your capital or your money, then you have to understand that if you buy some stocks or whatever security that you buy, is it going to increase in value so that you can realize that gain? Now, another subtle but important difference is that trading and investing, they are two different things. Trading, you are just buying and selling over a short space of time. You are just buying for and holding the stocks for even a few seconds to days and even weeks. Those are called swing traders, right? And usually it's less than a year. And investors, they usually buy and hold for a longer period than 1 year. So let's say if you want to buy shares and hold for 5 years with the expectation that the stock price or the value of that stock is going to increase, as will be reflected in the stock price. So basically, that's it. You just have to understand those basics. Do your research. Look for a brokerage that meets your needs, and then decide which stocks that you want to invest or securities. But I must say that it is very, very important to do your due diligence, to do your research, because investing is risky. So, how you reduce the risk is to invest in those businesses or stocks that you understand. And you could be wrong no matter how smart you think you are, right? So, it's very, very important to have some understanding of what you are investing your money in, and also how to mitigate or to hedge yourself against the risk. So, that's it for today. I just wanted to also thank you again for taking your time, and I look forward to